What's going on, folks? Welcome back to the show. My name is Rozbiani. I'm your host for today. Welcome back to After Hours. Just do me a favor as we're starting. If you could just, in the comments below, let me know if you can hear the audio clearly. I'm sitting in a new location. The internet's a little bit wonky here, so I want to make sure that I'm coming through clearly and you can all hear me clearly. And apologies for any technical difficulties that we may face as I'm adjusting to this new location. It's just temporary. So if you could just let me know in the comments if you're watching through Twitter, YouTube, Periscope, Twitch, wherever. I'd appreciate it if you could just update me, and we'll begin moving through the show. As you folks probably know by now, we do the show in multiple parts. The first part, we go over to the indices, about everything we've been looking at with SPY, QQQ, Bitcoin, Ethereum, sometimes throw in Doge if we have time. Then I go into a few stocks that I was watching today that have had nice movements and discuss those and review those. And towards the end, we do Q&A. So if you are watching the stream and you are have any questions about any tickers or any stocks that you want us to go over, you could throw them into the chat and I'll be more than happy to answer them throughout the duration of the show. So what I'm going to do is go ahead and bring up the old Benzinga Pro, and that'll allow me to kind of show you what I'm looking at, and we can discuss that. Just give me 1 second to switch on over to full screen, and we should be good to go now. Just double checking one thing. All right, you guys can see SPY. Eden, what's going on? Eden is a champ. Eden is the smash the like champion. So let's talk about SPY. So SPY, straightforward, as we know, this is our big S&P 500 index fund parallel stock that kind of goes through. We talk about that on every single show to kind of see how we're doing with the overall fund, with everything and every stock. Usually we have a lot of parallels with how the day is going, as a lot of people like to look at the S&P 500. So where's my MACD? Oh, no, I have it on already. I have it expanded. That's probably why. Oh, no, I don't. Okay. So just as a refresher, I like to use MACD and RSI to give me a good indicator of how things have been going for the day. And I look at the candles to see how we're doing. Again, if you're new, you're probably, I'm not sure why, but it looks like my drawing got erased, but that's okay. I have had a gap. You can see there's been a gap here between 400 and 403 for a long time that I've been trying to kind of been watching to see if it closes. And it looks like we're holding this support level right here around 403. It's come down to 403. It's come down to 405, but we haven't had that break into the 403 to 400 level yet. Honestly, with the way that everything is going, to me, this upward momentum, I think we're going to probably come up and touch 420, 422, and then come back down and probably close this gap as we get closer to the beginning of June, first or second week of June, and then we'll slowly come down here, touch it, and then slowly ascend it. I don't think that we're going to have one of those summers where it is a slow summer where everything is just going wild and everyone's just worried about the summer being slow. I think this year will be very, very different compared to most years that we're usually used to with the summer, where everything is just straightforward and quiet. But I think this year we're going to have a nice summer, and it's going to be a decent one. Again, a lot of people are saying small cap summer. I'd love to see that as well, but I think that right now we need to eliminate this gap here before we can move on to higher highs within SPY. I'm a little bit worried about this upward trajectory. I was hoping that here we would continue a downward momentum and move forward, but the RSI and MACD aren't telling me that. Right here, the RSI is giving me a sign that, hey, we might slowly start curving down into the rest of the week. But again, we'll have to see how that all plays out. I'm really curious to see how that goes and to see how everything goes there. But so next, let's move on to QQQ, which is our parallel to the NASDAQ index. So that's a fun one to always watch, of course. Let's give it a second to load again. Sorry, I'm in a location where the internet is garbage, so I have to deal with this BS today. All right, so we can see QQQ very nicely. It is that one actually filled its gap. So if you've been watching the show for a while, you can see that we had two gaps here, and they both got filled. And now QQQ is making its ascend upward. Again, I do believe the parallel thing will happen for QQQ. Well, it will come back down and test these lows one more time before we go back up. it is in a positive trajectory with the MACD. The RSI is flat, which is not a big deal, which is not a problem. But again, I'm still a little bit worried about QQQ because I think tech is still on fragile ice right now with the way that things are moving. So it's going to be wild to see how this one performs and how this one operates. But it's nothing to truly be worried about here. You have your bear stocks, which you can operate. Essentially, the trend line that I'm watching and I'm hoping will sort of hold through this whole process would be holding this level right here. Now that we finally come down and fill this gap, so I want to see it come back down, bounce off this line, and then make it ascend to a higher high next time. But again, I do anticipate this MACD reversal failing, but that's just me with the way that I'm expecting this thing to move. So just keep a heads up there. Optimistic wise, if we look at it from an optimistic angle, the MACD has finally crawled positive for the first time since it's been positive. Was the last time it was positive was April 21st. I'm sorry, April 22nd was the last time it was positive, and then we started heading into this downward trajectory. So we have a positive correlation there, which is good. It's good to keep an eye there always as things are moving, and we can see how this all plays out. So it's really, really nice to see QQQ having some good movement upward. So for those who are in tech, if you're swinging, it's probably a good time to maybe take some profits going on, and we can definitely have some fun there. Yeah, as Aaron's saying in the chat, shout out to Aaron, share the stream. Let's get this out to more people. Let's get more people in here. We're having really low numbers today compared to usual, but that's okay. It's going to be a family show, I guess, but we'll have some fun here. Hey, Larry, Eden, how you doing? Mercutio is in here. How's everyone doing? We'll get to Q&A very soon. Next, I want to move on to good old Bitcoin, BTC Bitcoin. We've got our harbinger of chaos, as I've nicknamed Elon Musk, creating all this chaos revolving around Bitcoin and all the craziness that we've been playing with Bitcoin. We see here that we came down and almost made a quote unquote, not really a double bottom, but almost retested the same lower level here. A lot of folks are like, oh no, it's the end of Bitcoin. I don't think so. I'm not really worried about Bitcoin long term here either. It is doing well today, relatively speaking, compared to how it was a few days ago when we were at a low of 30,000. We tested another low of 31,111 on Sunday. So it's slowly making its way up. I think that it will oscillate between these two Fibonacci levels here for quite a bit. So those two levels on TradeView, the coloring is really, really bad. On Webull, it's better. I think we'll oscillate between 30, 36, and 42 for a little bit. So those might be good places to where you can either scalp trade it, or you can start adding your position, setting lower limit orders for them to hit. Because right here, the MACD is showing me we're flattening out, but we could always continue going lower. And the RSI is showing me a downward movement, just keeping it to basic indicators of support here. But I'm still very happy that we held this 28,000 support level here, which has been support for a while. So I'm very happy that this level held, which was a good sign, which reflected positively. And the other good thing was this was able to stress test a lot of our favorite Bitcoin miners like Mara, Riot, Argo, Hut 8. Our favorite Bitcoin miners were stress tested, and I think they all did relatively well, relatively speaking, as to what could have truly happened compared to previous Bitcoin crashes / corrections that we've had. So it's very interesting to see how this has all been playing out with Bitcoin. So I'm really, really curious to see how the next steps go for Bitcoin, because I think that the future is bright and positive for Bitcoin. Crypto's here to stay. We saw the Bitcoin Council came out. I put out a YouTube video discussing the whole Bitcoin mining council, Mara going green. A lot of news came out with Bitcoin related yesterday, and I won't spend too much time on it here today. We'll just talk about the charts, because there's a few stocks that I want to talk about. They're a little bit more important today than good old Bitcoin. But before last one I want to look at is Ethereum. Ethereum is one that, even aside from this correction / crash that we had, I was expecting this to come down, because as you look here, it's had a massive upward movement. It sort of went parabolic from this support level here, which is this really thin blue line on the Fibonacci levels, so around 2,000 essentially. It went parabolic from 2,000 all the way up to 3,500, I think was the highest point. I'm sorry. No, yeah, a high of 4,300. So it went parabolic essentially from here to here in a matter of days, which was unforeseen and made really no sense. And it sort of kind of came down, gave up all those gains, and came parallel to 2,000. We went lower on Sunday. We tested a lower low on Sunday of 1,700, which makes sense. This thing has weaker support levels in this area. It's got a strong support level here, which is parallel to the Fibonacci at 14, essentially at 1500 if you want to round up a little bit. But it's been holding these two support levels that we have right here. I'm really watching these two green lines right here as support levels of 1900 and 2000 are the two levels that I'm watching. And today, Ethereum is essentially coming back stronger than Bitcoin is. So Bitcoin's having a little bit of trouble rallying. But yesterday, it had a fantastic day, a 26% day. And today, it's had a downward movement of 3%, which is not that bad. But it tested a higher high of 2768. So essentially, it had a decent day, in my opinion. This is the thing. When these things crash or correct and they come down really hard, it's going to take some time for them to be able to make a higher high or make their previous highs. Again, just give it some time, allow it to breathe, allow it to grow, and it will be able to make its movements upward. And then at that point, we won't have to be worried about it anymore. Because I was really worried as this movement was happening was we would have a crash like this. But with the whole Elon ESG situation, I'm not sure why it affected Ethereum, because Bitcoin was banned in China. Ethereum wasn't banned. Doge wasn't banned. These other things were banned, but they were all parallelly connected because they all follow the master, which is Bitcoin. They all follow that one, and they all come crashing down. Real quick, because I know there's a few Doge fans, just because I recognize you guys in the chat. I'm going to pull up Doge's chart as well so that we can kind of take a look at Doge real quick before we leave into the actual individual stocks. All right, we'll go with Bittrex, not a problem. Let's go with Bittrex. I'm going to do this one real quick, so I'm going to change banners. But again, this one, if you look at it, same parallel movement. It moves very similar to Ethereum, which is quite funny, which makes no sense. But it has had a parabolic movement, gave up those gains, regained some of those gains throughout that whole SNL fiasco, gave up the gains again through the whole ESG crash is what I'm calling it now. Just came up with that on the fly. Tested lows, but it's testing higher highs. It's doing well. I think that Doge will have a good future, but I don't expect it to run to $1 anytime soon. I think it will be trading sideways just like Bitcoin will and just like Ethereum will for the next like 2 to 3 months. And then at that time, it will be able to make ascend back into the 40 cent, 50 cent, 60 cent, 70 cent area and go to higher highs. So that being said, I think Doge, Ethereum, all of them are going to be fine. They're going to have their heydays eventually, and they're going to do great. I see a lot of questions coming into the chat. We will do the Q&A towards the end of the video. Right now, I want to discuss a few stocks that I've been watching, and then towards the end, we'll do it. But if you can do me a solid, smash the like button. We've been doing great. We've got small viewership in here today, which is fantastic. That means we can answer all of your questions. If you have a question, let's go ahead and we will discuss it. Richard Judge says, Bitcoin again, please no. Well, Richard, that's the thing. It's one of our 4 indices that we cover in the beginning of every single show. Because whether we like it or not, Bitcoin does now have an effect on our overall stock market. You have companies that have Bitcoin on their balance sheet, like Tesla, who are part of the S&P 500 in a significant manner. So when Bitcoin goes down, those stocks tend to go down, which brings down the indices. So whether we like it or not, Bitcoin has backdoored its way into the fabric of the stock market. So we got to go there. And Ethereum is following suit secondly, and I think we're going to see Ethereum more and more. And there's actually a tweet. I put out a photo I got from Instagram. Was that hedge funds are now half of the hedge funds are now investing in crypto, which is a big deal. I just want to make sure that you guys could see this. Oh, I'm not broadcasting from. I'm going through 2 computers today, so I'm having a bit of fun moving back and forth. But essentially half of hedge funds have reported that they're kind of investing in crypto. So PricewaterhouseCoopers and Elwood Asset Management have published their 3rd annual report on the global crypto hedge fund landscape, and their fundings essentially say that half of all these hedge funds are investing in crypto. So it's no longer just a game for retail, because retail played a big part. If you saw Coinbase's, speaking of the stocks that we're going to be covering, if you saw Coinbase's situation and what they're doing, Coinbase was one of the companies that showed that a lot of retail have been controlling the movement of these coins via Coinbase in terms of how they're making their money. So now that we're seeing hedge funds come in, they want a piece of the action. They want to make some money off of this as well, just like we do. So now they're jumping in and trading these stocks. So Coinbase is a stock that I actually saw a really good article today on Forbes where they discussed that Coinbase is reminding them a lot of what happened to Amazon when they came into the markets. So when Amazon came into the markets in the early 2000s, they crashed pretty hard. They took a big dive in the beginning, and then they began to rebound. And now we know Amazon is this Goliath company and this very powerful, stable. Essentially, it's, in my opinion, it's a value stock, not much of a growth stock because it doesn't grow much. It's been very flat for at least the past year, in my opinion. It did grow in 2020, but past year to date. Let me correct that. Past year to date, it's been quite flat. Coinbase is one that's been having trouble. There's a lot of memes online of the people that bought an IPO day, and why is ARK buying so many shares of coin? Well, because Coinbase, in my opinion, again, full transparency, I do own shares of coin. It's essentially the casino. This is how one of the investors described it on CNBC, which is what made me quite bullish on it. And it's true. It's essentially the casino where all of these all these cryptocurrency games are being played. Whether the people are buying or selling, Coinbase still makes fees off of them. And the more volatile this is, believe it or not, there's more transactions and actions and activity on the crypto markets, crypto exchanges. And you can see this within the blockchain. There's a lot more activity that goes on during these crashes and corrections. So I foresee that Q2 for Coinbase will be very good with everything that's been going on these past few weeks. So to me, these are fantastic buying opportunities. And especially when you're on a really red day and you're like down so hard and everything is down, it's probably a good time to, purchase Coinbase shares. And it looks like JP Morgan bought the dip and then initiated an overweight rating, announcing a price target of 371. That's a big deal. So a lot of people are now speculating and saying maybe they're initiating this price target because they quote unquote bought the dip, and maybe that's why now that JP Morgan's coming into the game and saying, hey, we want a 371 price target on it, which I get it. It makes sense. Like, now you bought the dip, now you're initiating this price target. We've seen them do that with Neo. Again, this is all allegedly. I don't want to accuse anyone of anything, but it'd be nice to see Coinbase to go to 371. But realistically, I don't see Coinbase going to 370, 350 to 400 area until maybe towards the end of this year. That's just my personal opinion based off of how things are moving. The markets are still very weary and don't truly understand crypto and Coinbase's management, and not management, but Coinbase's business model and operations. They're expanding. I was actually making a video on Coinbase, so I'm doing a lot of due diligence on their last earnings report, listen to their last investor call, which was very, very well done, very good. I really like their management team, very smart. And they took a lot of questions from retail traders, which you don't really see with these big companies at this level and this caliber. They don't take really many questions from retail, but most of their questions came from retail. And they answered them very well in regards to NFTs, in regards to like when are all the altcoins coming, DeFi, non-fee based transactions, which they said that they can't really do. So it's probably interesting to see how Coinbase plays out in the long term into the future. But honestly, I'm not really worried about Coinbase. I think that very soon into the next 12 to 18 months, there's going to be a lot of people who are wishing that they bought somewhere in this area when we start returning back to that 50, 60, 70, 80, 90, 100 bill valuation that the company was initially bought into by a lot of private investors. They raised money at 100 bill valuation, which makes sense in my opinion long term. But right now, I do believe that valuation was overweight. A lot of folks got excited, but just to comment real quick on ARK Invest buying. Again, ARK Invest does what a lot of investors should be doing, a lot of retail traders should be doing. It's called dollar cost averaging in. Their average is fairly good. I believe I did a spreadsheet on it. I think I might have it here. I'm going to try to pull it up on the screen. I don't know if I'll be able to mirror it onto the screen because I have, but I think their average as of the last time they bought, not yesterday or the time before, it was about $233 per share was their average share price, which isn't too bad. They dollar cost averaged in. They're moving a lot of money into it. They bought GBTC for the first time in a long time yesterday. Yeah, so I just pulled up the Excel. It was 239 was the last time, and they've bought ever since. They bought throughout this dip, so they're green. So ARK Fund is green. So people going around freaking out on CNBC saying, why did ARK Fund buy so much coin? Don't worry about ARK Fund. They're doing great. They're doing fantastic. I'm not worried about them. Long-term, Kathy Wood and that team have always delivered and always done fantastic. Who's Neist? I'm not sure who Neist is. Kadir Ka. I'm not sure who Neist is. But let's go into another stock that I want to talk to you folks about today. This is one of those stocks that a lot of people don't really touch on and don't really talk about. It's called Etsy. Etsy is a interesting marketplace stock that has come about that I personally didn't really care for until a few weeks ago when the price action started to become attractive again. Etsy is, for those of you who aren't familiar, think of it like eBay, but very niche, but not so niche. It's got much more of a hands-on feel. Think of it like a garage sale, but online, and anyone and everyone can use it. It's very user friendly. It's aesthetically much more pleasing than eBay is. I can actually pull up the site and show you Etsy really quickly for those of you who are new to it. And it's got a quite expensive stock price versus what most people are seeing. But as you can see here, they cater to a lot of niche picks and niche items and very, very different things here. Like you can see handmade stuff like tech accessories, greeting cards, leather, metal, woodworking. So there's a lot of different stuff that they have here on their website, which is quite cool, and it's quite handmade, and it's got that feel that a lot of modern folks like and enjoy. Etsy took a dip on a very good earnings call. With I think the earnings were great. I'm going to try to see if I can pick up the earnings. It's been a little bit since earnings came up, but by the way, you could always see earnings here within the financials tool of the Benzinga Pro. So that's one of the good things. Is so if you look here, their month over 3 month cash reserves went up. It's great. I like that. Short-term investments have gone up. Accounts receivable bill has gone up. That means money that'll be coming in has gone up. That's always a good thing to see. Their current assets overall are up. Total assets are also up as well. Liabilities are also up, but not by too much. It's not that big of a jump. I know a lot of people get freaked out when they see the word liabilities, but not all liabilities are a bad thing. The total revenue went down 3 month period, which I get it. I get why we had the drop. All right, I get it. A lot of people were freaking out, but it's not too bad, in my opinion. The net income was only down by 5 mil. If you think about it, this big of a drop 3 month over 3 month, where the net income was only down 5 mil, things were going well. Operating expenses have dropped, which is good. That means they're tightening up their margins. They're getting better. I guess they won't have to spend too much time on advertising anymore. They've become a bigger name, but I still think that they'll need to advertise a little bit more to get out there. But it's really good. Gross profits went down because your total revenue came down, but I think margins were a lot better this month over last month. And I just want to see if I can quickly pull up the guidance that they had for Q2. Oh, there it is. Thankfully, they don't put out too much news. So their estimated sales are actually up. Their guidance that they provided was from 493 to 536 mil versus the 494 mil that they estimated. So guidance is up, which means they're estimating that they'll do much better next quarter, which is completely fine. When I see guidance like that, and they beat EPS, and they beat sales estimates as well, and the stock drops, to me, that's a sign that I need to look into the stock, and I did, and I opened a position in Etsy. But I want to show you folks the chart. We could talk about the chart, and always, if there's any bear cases that you want to throw into the chat, I'm reading the chat as we're talking and going, so please feel free to throw it in there, and I'll be more than happy. MD says, did he sell Etsy is like a garage sale? Yeah, it is. To me, it's sort of like a garage sale. Depends on where you go and where you look. Certain things, it's kind of like a quote unquote garage sale where people put up all their antique stuff and they sell it through there. Like for my mom, for example, she likes to see all the old antique stuff on Etsy where it's like people are posting it on there and buying it up. So in my opinion, it's kind of like a garage sale, but it also has that customization aspect of it, and which a lot of people like, because like, for example, I saw Meet Kevin talking about it, where he got a customized stool built through Etsy that you can't really get done on a place like eBay. So it's got that authentic touch to it. So we had this big gap down, and we haven't closed this gap yet. I think the buying opportunity is still around until we close this gap, which means it's still in play for me to add more on red days. But it's down. MACD has started reversing. RSI is curling up, which is good, which means that we might be closing this gap very soon. And I think we'll close this gap and probably make higher highs and probably try to go back to the 170, 180, 190 area by the next quarter. So I'm not too worried about it at all long term, but I just wanted to share with you all what buying opportunities around. If you wanted to check it out, not a pump. I think the float's too high for me to even. No, the float's decent. It's 112. So buy it or not, it's 100% up to you. I'm not a financial advisor. The third stock that I want to talk about before we go into Q&A, and folks, if you're watching, do me a favor and hit the like button. Let's and share this to anyone that you'd like to come on board who has questions about stocks. This is the time for it. There's very few places where you can come and to an open forum and ask questions about any stock, and we'll go through the chart. If you're worried about a stock, we'll go through it. If you don't like a stock, you want me to bash on it, and you want to prove someone wrong, you can put it in the chat and we can talk about it. The next stock that I want to talk to you folks about is a stock that we've talked about on this channel a little bit, but not too much. But we've talked about it. It's Vizio. Vizio is in a very, very, very unique opportunity. So Vizio, many of you probably know it as the affordable TV alternative. They make affordable TVs that are actually pretty decent. They've IPO'd very recently. They've been struggling a bit since their IPO, but they're above their IPO price, which is good. A lot of companies you see IPO and they come crashing down below their IPO price. They had a very good earnings. They had very good earnings. Just I think it was last week or 2 weeks ago. It was 2 weeks ago. They beat estimates. People estimated that there'd be a negative 10-cent EPS. They came in a positive 2-cent EPS, and they beat sales by quite a bit. They came in at 505. Estimates were 484. Beat sales and net revenue that they estimate for their new platform to be 55 to 59 mil just from their platform plus, which is their alternative to kind of what Amazon Fire is doing, what Roku is doing, and they have YouTube. So Roku cut out YouTube, which for a lot of folks, like if you have seen my other streams with Sung, he's got 3 kids. He says that his kids watch YouTube more than they watch Netflix, Disney Plus, Hulu, and all that. YouTube is the go-to place for them. So in my opinion, Roku cut their knees out from underneath, which creates a massive opportunity for market share for companies like Vizio. So I opened a position in Vizio, and I'm liking it. Vizio is a very, very low float company and a low float stock, which means it'll have very violent movement until it establishes itself, builds a baseline of support, which it hasn't yet. It sort of has around this area, but it has broken through it around the $21 area. It's come down when we were dealing with a lot of market craziness and shakiness. It broke that and came down to like the $19 area one day in like pre-market, which I don't really care. I really focus on the intraday trading more than the pre-market and after hours. I like this one a lot long term because if they're able to execute the way that they are, their TV business will supplement their platform plus income, and the TVs are actually very good. I've seen them; their quality are decent. Samsung and Sony will always have the biggest market share in terms of televisions. Vizio will be a runner-up. Same. I don't even think Panasonic makes TVs anymore. I haven't seen them at least. But Vizio will be a nice runner-up to these. But I think Vizio needs to do a lot more marketing because I've heard way more about Discovery streaming service, Netflix, of course, Roku, than I've heard about Vizio. And I think Vizio has a fantastic opportunity to exceed with what they're doing. They've got a fantastic platform, fantastic tech that's out there. It's very easy to use, and they give you a bunch of channels for free. Like, for example, CNN, I think they give you for free. Food Network, I think they give you for free. So everyone is looking to cut the cord and get away from their cable companies. This seems to be a very, very affordable alternative to stuff like Roku. And it's an affordable stock in terms compared to Roku. Roku, I think they're still sitting in like the 300, 400 area. Right? Not Rockwell, Roku. Sorry, I'm dealing with a lot of 345 is where Roku's sitting. Roku took a big dive. Honestly, I think Roku should have taken a much bigger dive the day that they announced that they're cutting YouTube. I don't know why you would cut one of the big 4 streaming platforms that's free from your services, but who knows what's going on there. And if you want to compare it to Netflix, I think the only competition before I go to Netflix is Disney. Disney Plus is the biggest competition for Vizio. But again, Vizio operates as a tool to enter into the smart app space. So you can buy it and connect it to a monitor, and you can use it that way. You don't have to connect it directly to a TV. You don't have to even buy their TV. You can, the same way Roku just sells boxes or Apple TV just sells boxes, you can connect it to your actual television. So all that being said, Roku, I'm not really a big fan of since they cut YouTube out. That became a big non-starter for me. I wanted to open a position in Roku before they had done this. I was looking into Roku, Netflix, and Vizio were the 3 options I was watching. Obviously, Vizio is more attractive because it's cheaper, but looking at the longer-term thing, Roku, I lost a lot of faith in them. Netflix, I'm not a fan of at all. I've never been a fan of Netflix's stock because of how they operate. They're very debt-driven and debt-heavy. The stock has grown tremendously since 2020 of last year, since March of 2020 last year when it came crumbling down. If you look here, this is the big V that everyone talks about with the V-shaped recovery. Came crumbling down. The stock ran up to highs, comes down, but essentially it operates in a gap up, gap down situation. I don't like the stock because now that they're trying to enter the gaming space, they're going to be competing with mavericks of gaming like Unity and Blizzard and Activision and all these different companies that are out there, which are kind of the big Goliaths of gaming. So to me, this is where things start to get ugly and things start to get wild. So I'm not hugely bullish on Netflix and Roku in this space. The big competition that I see for them is Disney Plus, but Vizio can still capitalize on something like Disney Plus by because they have them in the ecosystem. I'm pretty sure you can download the app and use it. But I guess the biggest competition for Vizio would be A, the Roku box, and B, the Amazon Fire Stick, which is for $20 and you just download all the apps and you just rock and roll. But the best thing that Vizio does is they give you all those free channels. They really need to spend a lot more money. I'd rather them be unprofitable. I'd rather them come in at a negative EPS and spend more money on marketing and getting their name out there so more people know about the services that they're offering and can utilize the services that they're offering. That's just my rant on them. So now we're at the third part of the show, which is where I come in and I answer your questions, which means I'm going to need you folks to do me a solid and smash the like button. That way I can answer your questions. That's the only way we're going to do it. So smash the like button, drop a question in the chat, and I'll be more than happy to answer it. Richard, I totally agree. Netflix is way too expensive. By the way, this is a really cool layout now that we have. It's my first time seeing it. Netflix is way too high. I totally agree. $500 stock. I get market cap wise and all that. Even that, I think it's overvalued. They're way too debt driven. I don't like it. Not a huge fan. Not a huge fan of what they're doing at all, to be 100% honest with you. Looking through a few more questions. Larry says Vizio is a really good TV. You guys got the Larry sign of approval. Lee says, wait, Roku cut YouTube? I just watched YouTube on Roku yesterday. Yeah, so they saying that they're cutting it or they're not allowing new installs of the app. I'm going to double check that right now. Roku YouTube TV. Here we go. There it is. I hope you folks can still see my screen. I'm going to assume you can. Let me just double check. Yep, you can still see it. There it is. Roku announces YouTube TV breakup. Important things just for streamers to know. So yeah, it looks like Roku's YouTube TV breakup was announced. So again, that doesn't. I guess you can still use, or the contract with YouTube TV has expired. I think you could still use the YouTube app. Maybe again, I can't confirm or deny, but YouTube TV, the service has been cut. Like you can't go to their YouTube TV shows. Realistically, how many people really watch that? But that being said, I still like Vizio's software and applications more than I like Roku's. While we're on the topic, we have quite a bit of time left, and I don't think there's too many questions in the chat, which I will try to get to as many as I can. But let's do a quick little parallel look with Vizio and Roku, two services that operate in the thing. So their thing is called Smartcast. Smartcast you can watch free, the smart app TVs. We got a lot of things popping up on the screen. Let's go into Smartcast. That's essentially the service where you can kind of cast all these apps into your television and access the Vizio TV suite. You can stream all these apps, as you can see here. You can control it. You can connect across multiple devices. So what does that mean? That means you can watch from one. You can watch not just from your TV, from your computer, from your phone. So like, for example, the disadvantage that Roku has is I think you have to connect it to a TV. We'll double check. But I know that you cannot, like, for example, an Amazon Fire Stick, you can't connect that to your phone or your computer. Now, the big thing is you might be saying is like, well, would I care if I have it on my computer? This is where the big thing comes in. It's that live TV aspect. So, for example, if you're getting the channels for free, this is the controller, by the way. I'm just trying to scroll down to show you the channels that you get for free. So you do have, these are the actual TVs. So let me just go to it. Sorry, let me just where are we? So much going on the screen right now. Watch free, which is there, hundreds of free channels. You won't be able to get that on your computer with, like, for example, if you wanted to, just as an example, let me pick one that's neutral. Let's say you want to watch Comedy Central. A lot of these, or Fox Sports, or any sports network that you wanted to watch, you'd have to log in with your TV provider. I think with Vizio, you don't have to do that. The service just boops you in. Whereas other providers, you have to log in, so you have to have like an Optimum or Verizon login to be able to get there. Now let's check out Roku's little box and service that they have, and jump into that one real quickly. So here we go, Roku. how it works, stream and save, cut the cord. Let's see. You got the Roku TV. Okay, it looks like they finally have their own TV, but I don't see many people buying that. Let's go to the streaming players because we're comparing streaming players right now. Oh, cool. They drew straight to the point. So you got the Roku Express, Roku 4K Plus. Again, affordable device, parallel, similar to the Amazon Fire situation that we have here. And they've got bundles. I'm trying to see if they have something where I can, how it works. Let's go to how it works and see how this operates. So stream and save. What does it cost? So you start with the player for $29.99. There's a variety of TV manufacturers for affordable prices, which you just plug it in. You pay for the streaming services. Connects via Wi-Fi, obviously. You pick the product that's good for you. All right, that makes sense. That's really interesting that they have a headphone jack plugged into the remote. That's really cool. I got to give them that. That's quite interesting. And again, I got nothing against Roku. They've got some free channels, then the subscriptions, then you have authenticated cable channels. So let's see what free channels these folks give. You get, well, YouTube doesn't count. You guys just cut YouTube TV, CW, CBS, PBS. So it's all the free channels. So they're not giving you essentially as many free channels as Vizio is, which is unfortunate. But yeah, I think we've beat this horse to death here with the Vizio Roku conversation. So let's jump into Q&A. Let's throw in some questions to the chat. Smash the like button, like Eden's saying. Let's get some likes up there. Like buttons, literally, there. Just hit it, and we can just party. Vizio said, I thought Vizio was the El Cheapo TVs. They are the cheapo TVs, but what they have now is their streaming service aspect of it. That's what I always thought too. Sung was the one who told me about Roku. I'm sorry, about Vizio, and I was like, Sung, why are you investing in these cheap TVs? And he goes, no, listen, there's this whole new aspect to it. So I looked into it and I liked it. So that's that. Larry says you can mirror an iPhone to a Fire Stick. I do it all the time. So does that mean like you can, because I know the Fire Stick, can you plug your Fire Stick directly into your phone? So let's say you don't have a TV. Let's say you're in a college dorm room and you don't have a TV. I know that I can't connect my Fire Stick into my laptop. I've tried that. It didn't work for me. Can you explain that a little bit more for someone who's done this? Roku TV is built onto other OEM TVs. I have a TLC with Roku TV built in. That's interesting. No, I know that they have like they got that box that we just went over. Let's see. Richard says Netflix is way too high. Someone is saying about a short squeeze. We'll talk about that later. We could talk about GameStop for a second while folks are loading up their questions because I know I have a bit of a gap between when I speak and you folks hear it. Let's talk about GameStop a little bit. GameStop had a decent day. Again, we give credit where credit is due always. And I got nothing against GameStop. And I love AMC, the company. I have one share of the stock that Weeble gave to me for free, but that's just me. I got very lucky, and I'm going to hold that forever. I don't care if AMC goes to the $10,000. Everyone's squeezed shares talking about that one, saying AMC is going to get squeezed to $10,000 a share. That'd be quite interesting to see, though. But let's keep going. So if we look here, if my eyes aren't deceiving me, there's some sort of a bull flag pattern. Again, sorry for my screen will jump a little bit because I'm dealing in a really bad Wi-Fi area. So I'm going to try to draw some sort of a flag for you here that looks like it might have broken out of. So it looks like if you were in this play a few days ago, it broke out of a flag for you. But today was essentially the big pop movement that you had a 70% pop up. And again, this is a expensive stock to swing for retail traders because most retail traders aim for stocks that are either under $5, under $1, or under $10. And then they swing stuff like Palantir and all these other mid-cap stocks, which Palantir is an annoying stock to swing, which I see a lot of people talk about swinging Palantir. Palantir has been stuck in a box, but we're talking about GameStop right now. We'll talk about Palantir another day. But it had a really decent movement. They're trading among speculation for retail traders. You got earnings coming in 13 days. I think the earnings, I don't know if the earnings will change from last time. I haven't seen much movement from the C-suite of that company to see what they're doing and where they're going. So we'll have to see how that all plays out moving forward with this. So sorry about the laughing. I got people in the background being dumb. So that being said, we got someone going off in the chat. It's about to catch a block if you keep going. Check Mobile Legends channel. Get out of here. You're gonna get blocked, man. Sorry, Glorious. No one wants to hear spam. All right, let's see. Lee Pilgrim wants us to go over ELYS. Lee, you ask, you shall receive. Lee, by the way, is one of my Patreon members, so shout out to Lee. He's not just one of my Patreon members, he's also a good friend. Not ELY. ELY is the golfing company. I'll leave ELY to the folks during Power Hour. They like to discuss ELY a little bit there. Let's go into ELYS. This is a stock that my patrons and I have been swinging for quite a bit. We've been having quite a bit of fun with this one. We caught it on the low lows, and now we're riding it up. I think I discussed it on this channel a bit as well, but it is what it is. So I want to go a little bit more technical. So I'm gonna expand this a little bit, and bear with me. We're gonna have some fun. Let's play the game. All right. So where is my Fibonacci retracement? Where's my Fibonacci extension tool? So come to the low point, you go to the high point, you come down to the low point again. All right, so we're dancing between Fibonacci levels. We've broken above the 100% Fibonacci level, as we can see here, which is good. I like that. And again, I hope that my screen is coming through clearly for you all. ELYS is one of those stocks that is one that I like long-term and I like swing short-term. Personally, right now, I'm just holding it. I bought it towards this low area. I've dollar cost averaged in on the way down here, and I'm holding it. I like it a lot with the way that what they're moving. It reminds me a lot of Skills, much cheaper Skills. The chart is showing me a lot of life. I need to get my moving averages on here. Give me 1 second. I don't know where all my indicators went. Moving averages, and in case anyone's curious, while this is loading, moving average triple, I like to use the 21, the 50, and the 200. I get a medium term, a long term, and a really long term time period. So the 21, the 50, and the 200 simple moving averages. I know a lot of folks like to use exponential. I'm not a big fan of the exponentials. I like to use the simple moving averages. If I'm day trading, I'll use exponential moving averages, but for basic swing trading and stuff like that, I'll just stick to this stuff right now. So, all right. So we overtook the 21 moving average. Now we're fighting the 50 moving average, which is good. We closed above the 50 moving average, which is a great bullish sign, in my opinion. I like it. A lot of traders like to see the stocks overtaking these moving averages such that they can kind of make these higher highs. I like it. ELYS has had a time period where I wanted to see it to get to $5 and hold $5, and then I can see it quickly legging up and going to around the $6 area. Again, this is not one that's going to go straight up like most of your favorite other stocks, but it is a low float of about 13.85 mil float, so it will take a minute. Will literally move in a matter of minutes if the volume is there and the volume makes sense. So be safe and go in with a stop loss. It will fluctuate down. Catch it on a red day if you like it. Again, not a financial advisor, but catch it on a red day and it will probably do you some wonders. Lee says he's long on PLTR, as am I. AMC Zizzle. Does that mean you want me to go over AMC? You got to tell me. I got another question coming in about AMC. All right, so hold on. Let's do this. I'm going to throw AMC on the comment so we can throw a little. Oh, I'm commenting as Benzinga. Okay, that's okay. So, all right. So hold on. Let me do this. Let me throw up the banner for AMC, and we're going to do a deep dive into AMC because I like AMC, not just short term, but I like AMC long term. And a lot of people are going to. I hope a lot of people understand my thesis on AMC. Again, I only have one share of this thing just because I got it for fun, and I'm not trying to pump or induce a squeeze. I think squeezes and short squeezes will hurt your stock long term. Which is why I don't understand why folks like these squeezes long term. For like these squeezes short term, I guess you can make money in and out, but if you truly care about the stock or not care, no one cares about the stock, you care about a company. If you care about the company, you'll want it to make a movement in towards the upward trajectory. So if we look here, AMC has had two very, very good consecutive trading days yesterday and today. Yesterday we had an upward movement of 13%, and today we had another upward movement of 21%, which is great. Now look, my thesis behind AMC is simple. As we're going into the reopening, it's a reopening play. It's a true reopening play because it's one of the only reopening plays. Yeah, Richard, just one. I got it for free from Webull. When folks sign up using my affiliate link. They get it for free. By the way, if you want to use my affiliate link and sign up, you can just go to ryanstocks.com and you'll get all my affiliate links there. You get a bunch of free stuff there as well if you'd like to. But AMC, my thesis is simple. it's the true reopening play that really hasn't seen its heyday yet. Why? Because movie theaters haven't truly all opened up across the country. Yes, they've quote unquote opened up, but you have to realize there's that there's a psychological aspect to the reopening. As more and more people are getting vaccinated, whether you do or not, I'm not a doctor, I'm not Fauci or whatever those other folks are. I don't know anything about the vaccine. Don't ask me questions about that. But going into a reopening play psychologically, you would want a reopening play to be something that slowly opens up and you see more and more volume into it in terms of people going to the movies. We're seeing movies coming out into movie theaters more and more now. We're seeing the whole operation being moved up more now into the whole movie space. And things are getting a little bit better. Give me 1 second, please. So with AMC, that's my thesis is this. As we reopen, Q3, Q4 earnings will be great. One of those two will be really good, and that's going to induce a big jump in the stock because if I recall, the float's high on this one, which means there's a lot of volume coming in that causes a movement like this. It's almost a 450 million float stock, which means you're gonna need a lot of volume to jump this thing. And if we pull up, I think the volume should be on the screen. Again, I'm not sure why my preset. Again, yeah, it's got decent volume. As you can see, these big green bars in the volume, 300 million volume, 208 million volume. So it's got good inward volume. It means that there's more people buying than selling. So we're seeing a lot of movement within this in an upward movement. So I'm not too worried about AMC. Again, if you're swinging the stock, if you bought down here, you should probably be taking profits here. There's no real mathematical movement for this to go to $1,000 a share. I've been seeing that all over the internet. I'd love it to go to $1,000 a share. That would be the most profitable swing for a free stock from Webull for me personally. So I think that personally, that I'd love to see AMC to go to $1,000 a share, but right now there's no mathematical movement for it to go to $1,000 a share from here. I think if we could probably make our way back to maybe $20 a share, it'd be fantastic. Because if you look, this is the highest stock was in a long time, was $20 a share. We could possibly see $20 a share if this momentum keeps going. This is a momentum play induced by a lot of retail, induced by a lot of traders. And you have to also recall, once there is this movement and momentum from retail traders, you will see the hedge funds and the big money come in and the whales come in because they follow this movement. They want to be a part of this. They too make money off of this. It's not just retail. The hedge funds, the suits, quote unquote, everyone calls them the suits, also make money off of them. Stefan is asking, couldn't that be the Wall Street boys flooding it? It could, but I think that the amount of money needed to induce a big move on a stock, especially GameStop, it's coming from whales and bigger suits that are causing this movement. The same way that we saw it happen in Doge. We saw that there's a lot of whales came into Doge and a lot of whales sold out of Doge and caused a downward movement. Retail, I found to have much more diamond hands than suits, just across the board on average with everything that they do. So I'd say be very smart. Always take profits on the way up. So, for example, just if we wanted to do a quick lesson on taking profits, if you bought 1,000 shares down here on this first pop, I'd probably sell. On this first pop of 23% in this market, I'd sell half. And then if it came down here again, you'd be coming down here. So again, you at this point, once you sold it, if you sold half of it, you've essentially taken a lot of your initial capital off the board. And then on these two pops, I would have sold maybe 20%. And then sold another 20% here. So at this point, you're down, what is it, 20, that's 40, 50. So you have 10% remaining. So you're essentially riding on free shares. So you can sit and wait and sit back and watch this, see if it'll ever get to $100 a share, and you wouldn't care. And then when it comes back down to these levels where you first bought, now you've got a ton of profit, you've pulled out, you can again reestablish your full position towards these lows again for the next big momentum move up. So there's opportunity. It's not just I have to buy up here and then I hope that it keeps going higher. No, don't average up, in my opinion, on green days. It's unless you're a day trader. If you're day trading, it's completely different. Day traders buy and sell the full position on the same day. Swing traders, you scale in and you scale out. That's the whole point. That's the whole point of swing trading is you scale in, you scale out. So you were buying when AMC was dipping, and now you're selling as AMC is mooning, quote unquote. All right, so let's go to another stock. Hit me, Blaze, my man. Blaze is coming in with Tattooed Chef. Let's talk about Tattooed Chef. I got some good news for my Tattooed Chef friends. Tattooed Chef is a stock that I talked about a few months ago. I got a lot of ridicule from it when it went down. But again, as you probably, if you know me, I do not care. I hold my Tattooed Chef position. And I've got some good news that I got from the folks, Jeremy from Something Finance. I'm forgetting his channel right now, which is quite embarrassing because I saw the video last night. While this loads, I'm going to pull it up because I want to give him credit. He found this, and I like to give credit where credit is due. Come on, YouTube. I got to scroll through all the Benzinga videos. Jeremy Lebrev from Financial Education was the person who shared this Tattooed Chef news first. TTCF. Come on, internet. TTCF. Again, apologies for the internet issues. There we go. Tattooed Chef 21 again. Tattooed Chef is now legal drinking age in terms of stock price for the first time in a bit. Tattooed Chef took a big hit. Tattooed Chef is one of my favorite plays. Again, if you know me and my portfolio, I mainly operate in a lot of tech. I have some stuff on the side in terms of I got my Coca-Colas, my few of my dividend stocks, but Tattooed Chef is one of the only it's one of my two food plays. I got Tattooed Chef and Celsius Holdings, which is the sports drink Celsius, which has performed fantastically. If you've been watching the show, I brought you Celsius a long time ago on this show, and it's done very well. It gapped down, bought the bottom of the gap, swung it all the way up. So did the same thing with Lemonade. Lemonade is not a food company, it's insurance. But let's take a look at Tattooed Chef. Tattooed Chef is very strong here. Tattooed Chef is now just approaching oversold. So this is probably, again, only buy when it's red. That'll protect you across the board. Buy near support, buy on red days for if you're in a long position. It'll psychologically help you as well. So if you bought Tattooed Chef here during the craziness of April, which is very parallel to the craziness that we had in March, and the lows with Tattooed Chef load even lower in this area down to 17, you're probably having fun right now, especially if you're swinging, but it's moving its way up. So Tattooed Chef news is they've been planning to expand overseas. Now it's weird because Tattooed Chef operates out of Italy. Their kitchens are in Italy. Their farms where they produce the food is in Italy. For those of you who don't know, Tattooed Chef produces vegan and vegetarian food through the frozen food aisle. They're massive in Costco. They're massive in Target. Target said it was their biggest frozen food rollout ever in history, which is huge. Costco keeps giving them more and more shelf space. I've seen them in stores. They've got like a whole area. If you know frozen food, shelf space in frozen food is way more valuable than regular shelf space and expensive. So being in Costco is a big deal. They're also in Sam's Club and BJ's, which is also big. These big stores. Target was a huge acquisition, in my opinion, not an acquisition, but a huge partnership, in my opinion, for the growth and future of Tattooed Chef. So I think Tattooed Chef is going to do great long term. I do expect them to cool off. So if you missed it, you will probably see it come down and test this 50 moving average and this 21 moving average fairly soon. So that means we'll probably come back down to the sub 20 areas. If you're planning to hold long term, that's probably a good area to start dollar cost averaging into the play at that point. That'll keep you on your toes a little bit for a while so you can have fun with Tattooed Chef. But I think that Tattooed Chef is going to be good long term. I like Tattooed Chef a lot. Eden is saying GameStop is building an NFT platform on Ethereum blockchain. Yeah, most NFT platforms are built using Ethereum through smart contracts on the blockchain, so you can track where everything's going in a very, very simplified term of it. I'd like that. I think that's very smart. I want GameStop to succeed. I want GameStop to succeed as a company. I want GameStop to succeed as a stock. I never root against a stock or a company publicly, or usually never privately either, because to me, I think that there's so much money on Wall Street and so much money in the stock market that I want you all to make money here. We're winding down. We got 5 more minutes left, so smash that like button if you haven't already. Let's talk about it. We got a question coming in. What will squeeze more, AMC or GME, and why? I think AMC. So let's mathematically figure this out. So let's look at the float for both. So squeeze is induced by an influx of volume that causes it to move up. If the lower the float, the easier to squeeze a stock. So for example, Tattooed Chef, quote unquote, this isn't a Tattooed Chef squeeze. The Tattooed Chef has a 46 million float, which means it's easier to move Tattooed Chef compared to a stock that has 100 million float. So for example, if you wanted to move Tattooed Chef, and for example, a stock that has 100 mil float, let's say Mara, which is 100 mil float about, you would need twice the amount of volume to move Mara than to move Tattoo Chef by $1 of an increment. So let's take a look at AMC. I think the float for AMC was about 450 million, if I remember off the top of my head. 446. We looked at it a second ago. I'm not psychic. The float for AMC is 447 million. So keep that in mind. 447 for AMC. I think GameStop is a lower float than AMC. Come on, GameStop. I feel like I'm on dial-up land right now. Come on. All right. All right, there we go. GME. Sorry about that. And we're going to be winding down. So smash that like button and we're mathematically addressing it. So GameStop has a float of 40 million. GameStop has a mathematical easier possibility to squeeze much higher because of the float. Think about it. Don't forget the last 44 million issue. So there we go. Think about it as coming in with the numbers that are updated. I guess Benzinga hasn't updated the numbers yet. GME at an 87 million. AMC at a 495 million. Mathematically, GameStop can squeeze harder. But buying power-wise and psychological-wise, you'll see retail probably buy more AMC than GME because it's a cheaper stock. All right, I could buy more of it. So if AMC moves 10% versus 20% in GME, I have more shares of AMC, so I can have a bigger profit on there. So that's where I think that GME will probably and most likely squeeze harder than AMC. And we've seen that in the past before because of its lower float, even at the new 87 million float. Like Wall Street is a slow learner. I don't know what that means. Steven says you've got mail. I don't know what that means. AMC. I like GameStop as a gamer. Dan as a gamer says like GameStop. I'm surprised. Most gamers that I talk to are not fans of GameStop, just because of the whole situation of when they were kids and they were used to return games to GameStop, and they'd be like, they only give me $2 for the $60 game that I just paid for. So a lot of folks don't really talk about that, but who cares? Right now we're coming back, and I do think that GameStop will always have that nostalgic factor to it, which means I need to update my banner. We're doing AMC versus GME right now. So I think both of these companies have their nostalgic factors to them. AMC with the movie theaters, GameStop with the GME and their video game aspect. As kids, we would get a gift card, get some cash on the holidays, and go in there and do it. I do have to Stone Skin says he has a GameStop membership. Cool. And he's holding AMC calls. Shout out to you. UWMC. I'm seeing a few people asking about UWMC in the chat. I'm not bullish on UWMC. I don't have time to go over the chart. I'll be back on Thursday. So subscribe, hit the bell. I'll be back on Thursday. I'll cover those stocks. If you jump in, I'll make sure to cover UWMC. But I'm not bullish on UWMC and Rocket at all because of everything going on with the interest rates and stuff. The housing markets will be affected. Redfin has even said it. Redfin's like the big Goliath company out there that is saying short term it'll be a problem. Long term, I think they'll be fine. I agree with Richard. UWMC long term is good. And Rocket is also good long term, but again, we'll have to see. Rudy says Occupy Wall Street 2.0. So, folks, as I'm winding down, do me a solid. Smash the like button if you haven't. If you want to follow me, you can go to ryanstocks.com. I have my Twitter there. I have my YouTube there. If there are any Mara fans, I just put out a brand new Mara video going over everything in terms of all the news for Mara, all the news for Bitcoin. There's a video on my YouTube. And I also run Patreon, patreon.com/trading together. Again, linked in the URL here, where I work closely with traders to make fortified traders that are self-sufficient. You don't have to depend on alerts. You'll become a really good trader on your own. As always, folks, thank you so much for watching. Really appreciate you. Really appreciate what we're doing here. And I see producer AB. Producer AB, let's bring you in.
What's up? What's up? How we doing?
Doing good, man. How are you?
I'm good. I don't think my audio is coming through my headphones. I think it's just coming through my computer.
No, you're coming through clear, whichever way you're coming through.
Well, first show on your own looks like it was a smashing success.
Yeah, we started small, got bigger, had some fun, talked to the folks about the two favorites, AMC and GME. And now I think it's Money Mitch now.
Yeah, no Money Mitch tonight. We have Trading Nomadic at 7 p.m. Eastern, but nothing,
the guy with the tattoos.
Nothing in this next hour. So if you wanted to go a few extra minutes, by all means. I'm actually in the office right now up in Detroit, Ryan.
Okay, very cool. I see you got the green screen and the orange Benzinga background behind you.
Yeah, I
You're
don't
ready
think the
to.
green screen's gonna work like that.
No, I think you got to like stick it to the back of your chair so you can't see any of the orange. Well, which you could. I mean, if you were doing it and like if you were editing, you could probably run the green because the orange is pretty clear.
We'll figure it out. But yeah, Spencer and I had some work to do tonight, so I apologize for not being around. But hey, we'll be back Thursday now.
It was fun. Yeah, so the folks know we are back to a regularly scheduled Tuesday, Thursdays from 5 to 6 p.m. here on the channel. So if you haven't subscribed and hit the bell button, do so, and you'll be able to see this. And I promise to answer more questions. I will dive deep into the UWMC Rock and Redfin discussion. I'm doing a lot of DD myself to see which one I want to pick. So if you're fans of those, come into there. SBCE, we'll talk about that as well, Rudy. And yeah,
Dave use eToro.
I'm sorry. Let's get up to.
No worries, man.
I was checking the YouTube stream and then the ads started playing the whole thing. But yeah, let's get up to 50 likes. We only need 3 more before we end the stream. Let's get up to 50. I know we can do it.
There's
Zinger
145
Nation.
You folks in here. Come on, Zinger Nation. Let's do it.
I know we can do it. All right, Ryan. 3 more before we end. Oh.
I'm like, wait, he's saying the same thing again?
No, it was because I went back to the YouTube to check the likes because I can't see it on here. It's the whole thing. Hey, that's what they make the little mute button for on YouTube. All right. Well, there we go. 55. Let's go. Thank you, Eden Garden in the chat. Appreciate it.
Eden's the man. When Eden comes in and starts DJing the likes for me, I don't have to worry about telling people. Like, I got Eden, my little sidekick on the side.
We don't know if they're a man, woman, they.
Oh, yeah. Sorry for assuming.
All right, Ryan. Well, enjoy the rest of your evening. Folks. We'll be back Thursday. And let's hope for some green days tomorrow.
Let's hope for some green. All right, folks. Thank you so much for watching. RyanStocks.com for all the links. Producer AB, thank you. It was always, I had a lot of fun. Are you going to end the broadcast or do I end it?
I'll end it. Either of us can, but I will. I usually play this little thing. You'll see that I do. And then
Okay. All right, man. Peace.